The GTA resale housing market activity was muted during August due to a seasonal lull in sales during the second half of the summer, and as buyers awaited the Bank of Canada's last interest rate decision on September the 6th, a rate hold, following its July increase to a 22-year high of 5%. This is your recap of the August stats, followed by my thoughts and analysis of what is going on in today's residential real estate market. If you are planning on entering the real estate market soon or are currently a homeowner, it's important to follow along with the Bank of Canada's rate announcements. These rate changes will have a direct impact on the housing market and housing affordability. You'll be able to manage your expectations of the housing market better and make better decisions when it comes to your home ownership journey and budget. The next announcements are October 25th and December the 6th. Buyers should be in the market today, taking advantage of the current rate hold and looking for those opportunities that exist. Take advantage, for example, of First Home Savings Account. Briefly, the benefits of the FHSA are number one, reduce your yearly tax bill. Like an RRSP, an FHSA reduces your taxable income, meaning a nice discount at tax time. Number two, keep your gains tax free. Like a TFSA, the growth in your investments, including dividends, can be withdrawn tax free when used towards your first home without any payback requirements. Number three, transfer without penalties. If you don't end up buying a home, you can transfer the money to your RRSP without affecting your RRSP contribution room. Win, win, win. Same things with regards to the rates. You're considered a first time home buyer if you're a Canadian resident aged 18 to 71 who didn't live in a home that you or your spouse owned in the last 4 years. So you will qualify for a FHSA if that applies. Number two, you are not considered a home buyer if you intend to purchase an investment property. So keep these two things in mind when exploring the benefits of FHSA and if it's good for you. Pre construction remains the best way to get into the market as a first time or repeat buyer. Builders are offering very attractive incentives, and there are a couple and only a couple of projects offering below market price per square foot pricing. Keep in mind that as a result of changes to the Condominium Act, buyers of condo units will now earn interest on their deposits as per the Condominium Act 1998. The current situation involves a prescribed interest rate change. According to Section 82, bracket 1 of the Condominium Act 1998, the developer is obligated to provide the purchaser with interest at the prescribed rate on all funds paid toward the proposed unit's purchase price or credited by the developer to the purchase price. Interest becomes due and payable during interim occupancy. The developer has the choice to pay interest during final closing. Nevertheless, if interest on interim closing is not paid, it will accumulate interest at the prescribed rate until final closing, potentially increasing the amount owed to the purchaser. That's you. It means that the interest rate that you will get on your deposit is based on the bank rate of interest that the Bank of Canada for a 1 year mortgage. The September 2023 bank rate is 5.25%. So it's a kind of an added benefit or bonus to these high interest rates if you are in the pre construction market. Sneaky opportunities in the resale market are your next best bet. Those sellers that have to sell for one reason or another are often selling for less than asking and willing to offer incentives to get their home sold. Sellers, if you don't have to sell, stay put. Become a buyer instead and take advantage of opportunities. If you've owned your home for at least 36 months, 48 months, or longer, you look at the value appreciation and you should be happy. If you bought from August 2021 to August 2022, you may be feeling like you've lost, but hang on another 12 to 24 months and you'll see that you too are sitting on an asset that has appreciated noticeably. You can use your home as leverage when making a purchase. If you have to sell, pricing, staging, and preparation are everything. Month over month declines in sales during August were generally concentrated among homes priced over $1 million, which is most case of a detached or semi-detached property, led by a 16% decrease in activity within the 1.75 to 1.99 million price segment. Conversely, all price ranges below 1 million saw sales increase between July and August, with the lowest priced homes under 700,000 recording the strongest increase of 14%. Those are relegated mostly to condo properties. September numbers won't be in until the first week in October, but I'm seeing a similar pattern play out. Softer prices and lower sales volume than seasonal normal. The fall market is the second busiest market. Affordability will remain a hot topic and controversial issue heading into the fall market. On September 21st, Finance Minister Chrystia Freeland tabled new legislation to implement the promised removal of GST from new rental developments and to revamp Canada's competition laws, framing the bill as a package that will result in more affordable housing and groceries eventually. Key takeaways: the longer interest rates remain high, the more upward pressure there will be on listings as home owners face difficulties managing their finances. So far, banks have been very accommodative with borrowers by allowing them to extend out amortizations. However, as more mortgages come up for renewal, more supply and motivated sellers can be expected to arrive on the market. While prices will be supported by demand fundamentals, remaining strong during the record high population growth and supply being in a structural deficit, some further downward pressure on prices is possible in the near term. That's it for this episode of the Real Estate Podcast with me, Nico James Bach, a broker with Royal LePage Signature Realty in downtown Toronto. You can always review the charts posted to my various channels. Call me when you feel the need and or fire off a quick text or email. Ciao, ciao.